Okay, good afternoon. I'm Mark Levine, professor of real estate at the Burns School, Daniels College, DU, and I have the pleasure of talking with you for a few minutes on a topic that's very interesting to me, not theoretically, but practically, because I like to make money and keep it, not have Uncle Sam take it. And I mean legally do that. So my topic today is the area of taxation, but this is not an accounting class. This is not a let's prepare a tax return class. This is a class that's designed to focus on real estate tax issues that impact real estate. That is, you're involved in real estate program. One of the most basic issues is not how much do I gross, but how much do I net, and how much do I net after tax, after Uncle Sam reaches in, and of course, if there's state tax and so on. And I designed this course a long time ago, decades ago. But don't get nervous, it's not old, because the nature of tax is that it keeps changing. You probably know that there are changes being talked about right now for the Internal Revenue Code. That is the federal tax law that gives us the rules on taxation. And it's constantly changing. In fact, it's changing so much that the book that we use for class, which is one that I co-authored, called Real Estate Transactions Tax Planning. Here it is right here. If I hold it up, except it's not that one, because every year it changes. The one I just held up is 2020. The 2021 book, 2021 book, comes out in a few weeks. We always try to keep current on all things, I'm sure, in the Burns School. And I will tell you, in the real estate tax area, that's one of the most changing areas, or the fastest changing areas, in probably all of real estate. All in other areas too, but we're talking real estate here. So what do we do in the course? We cover the basic ideas of federal income tax. Yes, we cover some things that impact us outside of income tax, like estate tax and gift tax and others. Why do we do it? Not to do tax returns. No. We're trying to be aware of the tax problems or issues and ways to save legally money. We don't do things improperly illegal. We follow the rules, but there are plenty of rules that we can follow that can give us an opportunity to save a huge amount of taxes legally, and we can then produce that much better of a return on our investment. So what do? We assume no one knows anything about tax. If you do, that's all the better, great. But you're not required to take this course. And then we start off with some basics, move right along. Basics on the federal income tax, such as classification of property. Why do I care about capital gains, if you know what that is, and ordinary income? And there's a difference in tax rates. I want to pay the lowest tax rate I have to pay if I have to pay any. So we talk about it. And how do we achieve that result? And does it matter if I build homes and then sell them, or if I build apartment buildings and keep them, or if I have my principal residence, or on and on? And we talk about the gross income, the deductions that are allowed, usually from a business standpoint, but also personal deductions that are allowed. We talk about what happens when I sell a property. So we have property on acquisition, we have holding it, and we have disposition. And we ask the questions about, well, what are the different tax rules in those settings? How do I get tax credits, which is a way to reduce our taxes, because you get a quote credit, a reduction of the tax you would owe. When can I deduct losses, if I can at all? You probably heard one of the best deductions in real estate is the deduction for depreciation, the, if you will, wearing out. If we talk about physical depreciation, wearing out of a property. It might be an office building, or it might be the furnishings in the property, such as an apartment building. We can take deductions for those. How fast? Why do I say fast? Because the sooner you can take them, all things being equal, the better, because you want to reduce your taxes now and not pay Uncle Sam at all. But if you do, pay later, all things being equal. We ask questions about how we can defer the taxes legally. We might do tax deferred exchanges, you may have heard of. We might do a sale over time called an installment sale. We might do other planning that allows us to either eliminate or postpone the paying of taxes and or with a lower rate. So these are some of the things we do in the course. And again, I tell you, I'm very practical. I have a background in taxation, yes, and in, of course, real estate and some other business areas. But this is not, again, I keep saying, a course of doing tax returns. You can do that yourself, that's fine. You can pay somebody else, fine. But if you don't know the tax rules we're talking about enough to know it's a danger area, or enough to say, hey, if I do this, there's a better opportunity, or enough to ask your tax advisors how to best plan, then you're giving away money. And I show the students all the time in class, shall we save $1 today, $100, $1,000, $1 million? Because each dollar saved saves you so much in your pocket. Let's say that your tax rate, and we studied that quickly, let's say it's 30%. Well, 30% of a dollar deduction saves you 30 cents. We get you a tax credit, you save the whole dollar. And we talk about that and how we can get those on various ways for rehabilitating qualified property, for low-income housing credits, for other means to gain tax benefits. We also talk about it for other things, not just buy and sell, but buy, hold, lease. What's the best ways to structure a lease? And I'm talking about if you're the lessor, owning the property and leasing to somebody else, or you're the lessee, the one who is the tenant. We talk about the tax implications of all of that and how we can do some more planning, again, within the realm, within the limitations of the tax law, which keeps changing. There are so many things that you can plan on, that you can gain tax benefits on, but most importantly, come out better economically. And that might even be deciding which property to give away. And that includes maybe your family helping you in school. It includes maybe gifts you might make to your children, if you have them, or eventually. It includes receiving gifts from family members or others, the best way to structure those. It includes giving to charity. University of Denver is one of those, okay? But the best way to maximize the tax, give you a simple example. You have a piece of real estate and you want to give it as a gift to the University of Denver, to a church, to whatever. What's the best way to do it? How do you document it? And how do you get the most mileage, most benefits tax-wise? I know you have the altruistic benefits, but I'm talking about benefits of the tax side. Well, there are ways. Just like a painting. If you have a painting, you've got a Chagall, you've got something Monet, you have a painting you want to give. What's your benefit? Well, I'll tell you right now, on that real estate or this painting, you generally speaking get to deduct whatever you give to a qualified charitable recipient, the fair market value at the time of the gift. Well, that's crucial, because if the Monet is valued at $1 million, you get $1 million deduction. If it's valued at $2 million, you get $2 million deduction. You get the picture. The more you can properly value that, and that's where we get into appraisal and lots of other things, the more tax benefits. The same is true with real estate. There's some flexibility in how you structure these and your tax benefits. Now, if you make a mistake and you give it wrong, in the sense of you didn't comply with the tax rules under the regulations we'll study and the code section 170 and some other things we study, then you don't get the benefit. There was a recent case with a fellow who happened to be a real estate broker and an appraiser, and he gave a substantial gift, over $20 million. but he didn't substantiate the right way to give, and he lost the deduction. At 20 million, and if you were in the 30% bracket, like you said before, that cost you $6 million of benefit. So whatever you're giving, or whatever you're selling, or whatever you're buying, or so on, it's a game of structure and a game to think about the best ways to do these things. Now, I'm, again, very practical. I'm in real estate. I've been in real estate for a lot of years. I have taught this outside of the University of Denver and created courses for commercial realtors and residential realtors and so on. So this is stuff they really use. This is not theory. No offense to going and taking a history course. I love history too. And I like to learn about the Civil War and lots of other things. But this is real stuff that you apply on a daily basis, and it changes. So you have to not only learn some of these things, not memorize them, but learn certain things, and then realize how you have to stay up to keep that benefit. So that's what we do in the course. I, again, have been doing it for a long time, and with thousands of students, both at VU and outside of VU. And I will tell you, it's the most practical course, in my opinion, that you can find to help you keep the money that you earn. Real estate law, I teach too, of course, real estate principles, concepts, real estate, a lot of other areas. But this course is so applicable to each of us, to your parents, to friends, to relatives. And no one wants to pay taxes, but if they pay them, they say, I want to pay them properly and legally, but the least amount I have to pay. So with that in mind, I hope that I see you in my real estate tax class or others. And even if you choose not to take this class, I hope that you will think about taking some other training information in this area, because again, it's never ending of the kinds of legal things you can do to properly save that money for you and your family. I look forward to seeing you. Thank you.